Hey folks, welcome back to Girl Talk. We are so excited because we're going to be tackling a tough topic for folks, especially this time of year. We're going to be talking to Miss Nicole Broyles, who joins us. Thanks so much for joining us today.
Thank you.
So Nicole is with Broyles & Company CPAs, and you do tax services, bookkeeping services, QuickBook courses, which I think is great for business owners out there, payroll and HR services. So a lot under your umbrella.
Yes.
Let's start a little bit as we're coming into the new year, and let's talk about those individual income tax returns that we're all dreading having to get to, right?
Yes.
Let's get some tips for viewers at home just in this process.
Okay. If you have had a substantial amount of income in 2015 compared to prior years, you might consider paying some extra expenses to offset that income. For instance, bunching your deductions. If you itemize your deductions, maybe pay your property taxes before December 31st rather than waiting till January. Oh. Maybe making some extra charitable contributions that you might make after the first of the year. If your income is associated with maybe some realized gains from your mutual investments, your stocks, then maybe consider looking for some losses that have not been realized within those mutual funds or those investments, and sell those to offset the gains.
Right.
So,
so if your income is greater than you've been used to seeing, after you're done doing your happy dance, there's some steps to take to help you not to avoid
minimize
some of those taxes.
Exactly, help minimize the tax associated with the extra income.
Good
Sure.
tip.
And you mentioned charitable contributions. Is there any documentation you need for your personal taxes?
It's different for cash versus non-cash contributions. So for a cash contribution, if it's less than $250, your canceled check or your record of receipt, record of payment is sufficient. If it's over $250, then the IRS says you need to have a written receipt from the organization identifying that they are a tax-exempt organization, that they have provided no goods or services in exchange, right? And that it's dated and the contribution was made in 2015. And you have to have that receipt in your hands before you file the tax return. If you get the dreaded letter from the IRS saying, we're auditing you, we have questions about the contributions you've made, and you go back and try and get that statement after the fact from the charity, they will disallow that deduction.
Too late. That's good to know. So a little bit of pre-planning. It's great when you can give back. You just kind of need to know going into it that you need the right
You need to have the
hand
piece of paper,
when you walk
right?
out that door. I like that. Okay, good to know.
And what about the non-cash then, when you've got your box of sweaters and kitchen goods?
Yeah, everybody loves to donate to Goodwill, Salvation Army, what have you. And the IRS unfortunately says, we want you to maintain an itemized list of what you gave. If it's 10 shirts, 3 jeans, 4 shorts, itemize it. And then for each item that you gave, you identify the value of that item. If you go to any of the those charitable organizations' websites, they will typically have a guide to use for valuing the donations. And even better, take pictures of what you did give. So with the pictures, the itemized list, that's the documentation you need to prove if it ever got questioned by the IRS.
That's so smart. So boxo junk doesn't qualify, right? You need to know what's in that box.
You know, you might get away with it for a small amount of contribution, but if you get into $300, $500 worth of donations,
really clearing
it's a
out.
different picture.
Okay, really good tip. I want to make sure we touch on this because last year this was a big situation and something that I think a lot of us are aware of, but there was a lot of fraudulent returns.
Yes.
So what is the IRS doing this year? Are there changes?
There's a new program that they're rolling out as a test for this tax filing season with regards to the W-2s themselves. They have partnered with a couple of the larger payroll providers who prepare W-2s, and they are going to be putting a unique 16-digit code on the W-2 itself. When you electronically file the return, you report that code that's on the W-2. Then when the IRS gets your return, they can verify if that's a valid W-2. And it's not someone just making information up and filing a return under your name.
And trying to get your refund.
Exactly, right.
It's so sad that we have to think about that, isn't it? I mean,
Taxes are miserable enough.
Right, I know.
And if you have been a victim of identity theft or suspect that you have been, you can get a PIN from the IRS. You can go online and request a PIN that is unique to you. You use that PIN when filing your electronic return, and then the IRS says, okay, I have this return, this is the correct PIN. If I get a return without that PIN for this individual, I know it's a fraudulent return.
Gosh, Nicole, so much information in a short period of time. You're a
Yes.
whiz. Thank you so much. This is Nicole Broyles from Broyles & Company CPAs. Lots of great advice. We'll have you back, and we hope to have you back in just a minute here on Girl Talk.